So today, I'm Melissa, and I am a financial sales consultant with PNC, and we are part of the organizational financial wellness team. We do workplace banking. We do workshops. We meet you in person, virtually. It's all about financial education. And then today, we're going to be getting some education on preparing for an emergency. So just bringing things up that you may not have considered about financial emergency and what it actually is. So, by the end of this workshop, we're going to try to understand what is an emergency, how to understand the importance of having an emergency plan, and then learn some tools and resources how to develop and implement the emergency saving strategies, how to budget better, save better, maybe spend better, and then develop those skills to protect yourself during those times of the financial emergency or uncertainty as things pop up. Because life is definitely full of surprises, both good and bad. We're all at different stages of our career, our life, our paths. So, definitely just giving you some tools and resources on how to maybe prepare for these. So, what is a financial emergency? Let's let you kind of look at that for a minute and kind of think in your mind what is an actual emergency in your own mind. And then we'll kind of go over a few. So it's the need resulting from a serious unforeseen event, such as a business, financial transaction, divorce, serious illness, accident, job loss, death in the family, home fire, natural disasters such as a hurricane, flood, earthquake or tornado, which I'm from Xenia, so I know a lot about tornadoes. If you're from Dayton, you know a lot about tornadoes. So there's just different things that we have, especially in this area, that we may have to plan. Um, is it a financial emergency? Just kind of read through these with me and think yes or no if you think it is a financial emergency. So if you blow your tire and you need to buy a new one, is that an emergency? If you slip on your deck and have to go to the ER, your video game console breaks suddenly. That one always makes me laugh. If your furnace breaks in January, your laptop breaks, and you are definitely a freelancer and you need your computer to work, or your laptop breaks and you enjoy watching movies on it. So just kind of think, yes or no, are those financial emergencies? All right. So if you blow your tire and you need to buy a new one, yes. I mean, is that your major transportation to get you to work, school, somewhere that's necessary for you to be? If you slip on a deck and you need to go to the ER, yes. That could put you out of work. So if your video game console breaks suddenly, it's not necessarily an emergency. And if your furnace breaks in July or June or January, I guess through probably then, definitely is going to be an emergency because that's when it's usually the coldest here. And then if your laptop breaks, are you a freelancer and need a computer to work? Yes, because that's your job, that's your livelihood. And then if your laptop breaks because you watch movies, not necessarily a financial emergency. So everybody's financial emergencies are a little bit different. But we just wanted to go through, some additional emergencies for one person. It may be an emergency for you, but not for someone else. So we just want to go through and just kind of make sure you know what is typically something that you would definitely need to save for. So in our next activity, we're going to learn about an average cost of some of the most common financial emergencies. And then just kind of guess, what you think the cost would be. So if you have the average person pay for a health related emergency, do you think it would be $250, 500, 1200, or is this a trick question? Because insurance covers all health related emergencies. And then what is the average cost of an emergency home repair? 1,000, 750, 500. This could be your furnace. This could be just something that breaks at the house that you definitely need. And then after an unexpected job loss, how long does it take for an average person to get a new job? So if something happens and you lose your job and they do layoffs or just something, tragic happened, how long is it going to take you to get a new job? And then if you have unexpected car repairs, an average cost is approximately $500. How many people do not have enough savings to cover these costs? And then these are on, if you are able to open up your participant guide, this is on page 4, just so you have that. And this is something you can do later or together with us also. So let's see how we did. So the average cost per person for health related is about $1,200. The average cost for a home repair is about $1,000. The unexpected job loss and how long it takes a new person to get an average job, maybe making the same amount with your criteria that you have, your education, it could be 6 to 12 months. There definitely are jobs in there that you can get maybe faster, but if you're looking something comparable to what you currently have, by the time you redo your resume or meet with a specialist and then try to get somewhere that's comparable to what you have, it could be 6 to 12 months. Unexpected car repair has an average cost of about $500. Only 1 in 3 people would have enough to actually cover this cost. So you can do a little emojis, to see how you did. If everyone did, guessed right, maybe you can put a little sign on there, a little thumbs up. So it's just letting you know that, if you lose your job, you could find a new one after a month, it could take a year. So it's just letting you know that different things are taking longer, especially, in the economy. Saving for a financial emergency. Now we'll look at how you can save for a financial emergency. So, if you are the 1 in 3 that just struggles to save for that emergency, we do have budgeting tools, tips, tricks on how to do this. So we're going to kind of go through a few and just see how expensive common financial emergencies can be. How do you prepare? And one of the best ways to have an emergency fund. It's basically just a personal budget that you set aside financial safety net for future mishaps or unexpected expenses. An emergency fund differs from other types of savings. So if you have others for short-term and long-term goals, those are your goals. This is money set aside for that emergency. And then we're going to talk about how many months you may have for that. So if something does actually take on where you have to actually have that emergency. So here's some 5 options covering costs of financial emergencies. So if you don't have a high emergency fund, there could be potential drawbacks for each option. So you've got high interest borrowing. This includes like payday loans, income tax refund loans, high interest credit cards. The problem with these options is the high interest rates, which often cost you more in the long run. So if the interest is not compounding, which means you're paying interest on the interest. So when you get these high interest loans, you maybe only pay the minimum payments, which is your interest payment. So you may not be paying down that principal. It may help you in an emergency, but you have to be able to budget better to kind of save and pay a little bit more towards that principal too. Borrowing from friends and family. I don't know if anyone's ever done that, but it doesn't always work out. Sometimes it does. It just depends on how everyone is. And sometimes you end up losing a friend or a family member. Um, but it takes work. So there could be added tension in the relationships with loved ones. It happens you can't pay the person back. What if you borrow the money and it ends up a financial emergency and they need the money back sooner because they have a financial emergency. So it's very stressful on you and them to give it to friends and family, especially, with loved ones. It just can put a really damper on your relationship. You can pawn things during a financial emergency. Some people choose to pawn things. Um, you could sell items. We have, of course, Facebook Marketplace now. So you kind of go through what you have, what you don't use. Have you not touched something for a year? Um, so it's just letting you know that these items, are they true to value of the piece that means something to you, or is it something you can get rid of? Just parting with something valuable sometimes is a heartache too. If you have an auto loan or just need quick cash, sometimes you could potentially lead to the loss of your car when someone takes the title, and you can't pay it back for the financial emergency. So pawning items or selling things, just really make sure it makes sense before you do that. You can overdraw from your accounts. So during financial emergencies, you may try to access any and all money that you have available. Sometimes this means overdrafting your account, making late payments, skipping payments. The problem with this approach is that it sometimes costs you more in the long run. So as those overdraft fees or late payment fees build up, it adds more stress to you. It can hurt your credit, which means a harder time getting credit cards, loans, consolidations, mortgages later on. So we know hiccups happen with your credit, and there's always time that you can rebuild it. It just takes a little bit longer. But definitely things happen, and we try to give you the tools and resources so if those have happened, we help you by going to like annualcreditreport.com, disputing items, trying to get settlements, going to Experian, doing the boost. So there are things that you can do later if you have been in that situation. And later on, like I said, I'll give you my contact information. So if this is something um, that has happened with you, please reach out and we'll help you get through that because you're not alone. It happens to everyone. Um, Also, with your retirement savings, the final option that we look at to cover some costs from the financial is using your retirement savings. This includes taking out of your retirement savings loan or liquidating some of your assets in your retirement. So while the money may help you get through this, um, these accounts often have those penalties. I know sometimes I've heard they've been up to like 30% for the penalty. So you pay taxes plus the penalty charge. So it could jeopardize your retirement also. So you have all this money sitting in retirement, and then it kind of puts you on a setback for your retirement goals. So without adequate savings, you might be forced to turn into a formal or informal source of credit using alternative higher cost loans. Um, so an emergency fund is a better option if you can save your $5, your $10, a month in that emergency fund. It could help you from going into um, a situation that you may not be able to get out of for a while. Emergency funds clearly are the best way to handle the financial emergency, but how do you actually go by building one? So what we're going to do is kind of give you some techniques to where you can maybe spend less, save more, and then pay off that debt. So it all adds up. Some of the techniques that we have for your emergency fund are going to be set in. So if you struggle, you are not alone because savings is a challenge. I know personally, um, I would much rather go to the movies, go on vacation. But if I can save on certain things or be more savvy with my shopping, I can put a little bit more on my emergency fund. I have one. It could be more, but I like to have fun. So it is a struggle to save, but I do know that I have had some challenges, some emergencies that have come up, and I was thankful that it was there. I just a quick note, I'm on the road all the time traveling for work. So I know in my emergency fund, I have to have money sitting there for brakes and tires. Um, so I did get new tires, but I think it was like a month later, I got a nail in the side. It was not covered. But they gave me a discount. So I had to spend, I think it was $130 to get that new tire, but it was better than paying the 400 for a new one. So just having that $100 sitting there, I was able to say, go ahead, get me a new tire. Um, and then because I'm on the road all the time. So I would have been nervous having that, um, just the temporary plug that they normally put in it. So that's just personally one of my things that I have to make sure I have that emergency fund on. But maybe your income barely, covers some of the expenses, such as rent, food, and utilities. So maybe having a decent amount of income, but you never seem to have enough left over at the end of the month for putting towards savings. So most like you're somewhere in between. But the good news is every little bit counts. So if you're paid twice a month, just saving $50 per paycheck would add up to $300 after 3 months, $600 after 6 months, and $1,200 after the year. So if you could set up that automatic draft from your checking, your savings to go into that, have those envelopes. I've seen those on TikTok and Facebook where people have envelopes. Um, Whatever your method is, if you could put at least $50 shaved from somewhere on your budget, then at least you would have that, security fee. A good way to help yourself too um, is to have that automatic. And another few things that we have are setting reminders. So if you can set yourself a reminder on your phone, on your Outlook calendar, to pay bills on the auto pay. I know with our accounts, we have a calendar. I don't know if anyone already banks with PNC, but we have a calendar that says when bills are coming in, when they're coming out, when you may be in the red. It says what buckets you have for your savings for this or that, short term and long term, emergency funds. Like I said, you have the envelope method. You have the budgeting apps. There are a lot of apps out there. So if you like to write things down or find an app, there's always an app for everything. Um, and you can see where your spending is. You can categorize on your bank account, what are you spending at entertainment? What are you spending in gas? What are you spending in groceries? Are you using the gas apps? Are you shopping for the best rates here and there? So just different ways to cut everyday expenses. I know personally I had to shop for insurance. I loved my agent, but it was just getting too expensive. So I shopped and I saved like $800 a year, and that's huge. Just bundling a few more things, finding that savings was huge to save for different things. Having that automatic draft of $10, $20, $50 go into the savings account helps me stay out of sight, out of mind. As soon as I get paid, it gets swept out. If something happened, I know I can still get to it, but it's the out of sight, out of mind automatic draft. And then, of course, creating that savings goal timeline. So if you know that you struggle, you can say, okay, within 6 months, I need to have this amount because I know I'm going to need tires at this point. Divide your the amount you need to save by the amount of months, and just set your goals and make sure you set those reminders that am I meeting my goal? Do you have someone that you can follow up with that will keep you accountable? So, your spouse, your partner, a friend, say, hey, can you just check on me? Just like you would say, hey, ask me if I did 10 sit-ups today or I walked 2 miles, or, you can say, hey, see if I'm on my savings goals. So you can definitely, friends will do that. They'll put it on their timeline, just keep you in check too. I know the putty system definitely works and helps. So, Patty, is there any questions in the chat yet?
Nope, I don't see any questions. I did add a quick comment. I think utilizing coupons can really help with saving for sure. I definitely cut those out and use them at the grocery store.
Great. Yes. I remember watching my grandma cut out coupons after coupons after coupons. And I do look for things. I'm shopping um, the day after Thanksgiving when I actually go into Target. That's my go-to for like toys and or Walmart in the morning. I'll actually look on Amazon now. And if it's cheaper and the free shipping, I'm having it sent to my house and I have it the next day, even if it's $10 cheaper. So definitely using those coupons, those apps. You can scan barcodes now at CVS, Walgreens, Target, just to see where things are cheaper. And sometimes it's cheaper online. So um, definitely, thank you, Patty. So we do have a 50, 30, 20 rule. So this is just one way that you can kind of set that budget. We talked about ways how you can spend less so you can save more, but how do you know you're saving enough? Um, you really need to save for yourself too. You always pay yourself so you can have fun, but these are just ways and different factors that can include your income where you live, whether or not you have children, and so on. But the rule of thumb is kind of 50, 30, and 20. So, according to this rule, no more than 50% of your after tax income, so that's what you bring home, should go towards your needs: house, utilities, healthcare, etc. No more than 30% should go towards your wants. So you got to think about your wants: eating out, entertainment, and hobbies. Then 20% should go towards savings and debt repayment. So, and that savings can be your personal savings, your short term, your long term, your emergency. And then putting maybe additional extra, principal on that debt repayment just to help eliminate maybe one of those debts that are just driving you crazy. So again, circumstances vary, but this rule is just useful to sit down, look at your income, look at your debt. If you need help doing your debt to income ratio to kind of see where you are, where you can save, use your participant guide, write down all your debts, and see if there's something that you're paying, like a subscription to a membership, anything that you're like, I haven't even been there. Why am I still paying $20 a month for this? I don't even watch this. Or I signed up for this and forgot about it. Check your budget, check your account, check your subscriptions, see if there's anywhere you can save a little bit of money. But you have the general idea of how you can be budgeting and saving these techniques, but no financial plan is complete without accounting for potential financial emergencies. So, experts recommend to cover between 3 to 6 months of expenses. So, depending on you, if you are a single person or you have a joint income in your household, that's between the 3 to 6 months of expenses that you should have. So, what type of emergencies do you anticipate? What are the cost ranges? What your goals and then methods that you have, those monthly goals, and then time to reach those goals. So, if you want enough to cover between 3 and 6 months, this doesn't include you cutting back on such thing as, eating out, or this could include, such as eating out, gym membership, shopping. Instead, covering your basic needs like groceries, rent, mortgage, utilities. If 3 to 6 months of expenses sounds like a lot, remember the idea. It's to start earlier, small amounts can add up. And then, like you start with $10, you're like, yeah, I can save 20 now. Now I can save 30. So it's just starting small and then adding those up so that you have enough. And then you can just be proud of yourself when you hit those goals. And then where do I put my emergency savings? So you've done the hard part of figuring out how to carve some out of the savings. So by writing everything down, seeing what you can save. Now I know on mine is if I definitely want a soda for the day, I try to go to the gas station and spend on the fountain drink versus the twist off in the coolers because it's like $2.60 for a Coke, but I may only spend $1 for the fountain drink. So saving that $1.60, um, if I was doing that every day, which I try not to, um, is huge. So, I mean, there's $30 a month that over $30 a month that I'd be saving, by the time taxes and everything else, um, just getting the fountain instead of the twist off, even though it is convenient. So, just different things that you can, think about where you're spending and what you're doing. So, embarking on these funds mean you're labeling how money is to be used in case it is used for emergencies. This practice has been shown to increase savings and rates. So, to create a rule in mind for customers, consumers on how funds are to be used, this rule can make you think twice about how you use money for anything and all other emergencies. Checking in savings, separate or distant from all the other accounts. So I'm very transparent. I have my PNC account. Then I also have my husband's military. So we have a USAA account. So I try to pop. They're not as easy to get to. So I do like having that. Plus, I go back and forth with rates. Who has the best rate today? Who has the better rates on this or that? So I go back and forth. So just having checking and savings, separate accounts. Um, It's nice because I can do external and internal transfers. It's there the next day. PNC is amazing about external transfers. Next day, it's there. Zelle, it's instant. So there's where if I have extra money and I'm sending it, it's going to either be there that day or the next day for free, which is really nice. Um, Cash for emergencies. There's no one size fits all method. So put money aside that feels right for you. Keep enough on hand that lasts you a few days. So sometimes we need cash. I mean, a lot of people now are being charged. So when you go somewhere to buy something, there's like, oh, you're going to pay the 3% fee. And then you're like, okay, so I have cash today. So every once in a while, it's nice to keep cash in case someone's going to charge you additional fee for using your card. Budgeting during the financial emergency. So now we're going to explore some financial strategies so you can use this for your when you're experiencing a financial emergency or facing a time of financial uncertainty. Um, let's look at your budget. Budgeting is important tool for maintaining your health, especially during the time of emergency. Your priorities may shift. That means your budget should shift too. So when something comes, you may not be able to save as much, but you can adjust it. Perhaps you have the 50-30-20. Therefore, you save 20% after taxes, but now you need to focus more on paying debt and covering basic expenses, which means you may have to cut on the percentage of your income that goes towards your savings, but at least you know your debts are paid. Um, so everything shifts. Everyone's situation is different. You may have to get rid of the subscription, the gym membership, eating out, um, seeing what's in the freezer before you go to the grocery and just adding some things. So definitely try to utilize some ways that you can, save. And then debt management pricing. So there's two ways to help decrease expenses during the financial emergency. Managing your debt a can make an already difficult financial situation into a more difficult. But the good news is you're facing a financial emergency. So you have many options depending on the type of debt. So if is it your car payment, student loans, credit card, you may be able to make debt more manageable. For example, refinancing your mortgage with a lower interest rate, home equity. Sometimes if you own your house, you can have a home equity on the side, which is nice because you can get a set amount and you're only billed on when you use it. So if you have high interest rates at, 13, 15, 20, 25, but the equity is a lot less and or you have a 0% on a credit card for 12 months and you just have a short-term goal that you're trying to get out of, definitely sit down with one of us. We'll do a one-on-one financial education, financial wellness review. It's complimentary to you, and see if it makes sense. If your rates are good and you have questions on the 0% or the equity, we'll let you know if it makes sense or not. We'll take all your budgeting, turn it in, um, and see if we can save you any. So definitely, if you ever have any questions, it is complimentary to you just to reach out. My contact information is in the chat at any time. And I'll give you some information on when we'll actually be out at your locations too later. So I don't know if anyone actually does price shopping. And I think I told you earlier, definitely, insurance, health insurance, the digital tools, the apps, just having a McDonald's app today because you spent, $10 yesterday, you may have a dollar or two off for free this or that. Definitely utilize those apps, coupons, like Patty said, and just price shopping, trying to get something. And then you also have options for increasing your income. So a lot of times we have a little side gig, freelancing. So budgeting and price shopping can help minimize that, plus having a little extra money. I know we have, so I'm a part of a rescue. Patty and I adore dogs and cats. Dogs are our love. So, just babysitting, walking, shopping for someone, just different little things that you can do. Um, just helping out somewhere for the holidays. So there's always things, if you're an entrepreneur and want to, sell jewelry or just different things that you can, do to make additional funds. It definitely helps out sometimes. And you can develop, skills for a higher demand job. Did you go back to school? Have you gotten certificates? Just different things that you may have to put in place for yourself to seek out those high demand jobs. And then you have things in place to get that additional funds that you've worked hard for, that education, that certificate, just going in and researching and taking this job, and this job, and just taking all of those things that you've learned, updating your resume, increase your skills and qualifications. So protecting yourself during these difficult times also, it's important to save your documents. Now, I know a lot of people don't have a safe or a folder that they use, but if you can take pictures and there's an app, of course, that you can save for documents, put it in a file, save it at home if you have a safety deposit box. So there's different things that you need to protect, and that's typically your birth certificate, passports, social security cards, things. I don't know if you've ever had a flood, a fire, loss of house of and your tornado. There's just different things that it's nice to have it in two different places. Um, and you have your insurance, health insurance, income protection insurance. If your mental health, it's definitely you want to make sure that you have things when you're faced with emergency, that you care for yourself, and always seek out for help if you need it. Replenishing your emergency fund. So if you do have to use that, make yourself a goal that you can get that built back up for your security and your mental health. Um, and then remaining financially flexible. Sometimes we get on a goal where we need this, and this, but things happen, life happens. So your budget has to be flexible. Utilities go up, rent goes up, taxes go up. So you have to be checking your budget every 3 to 6 months and or monthly, because things change so much right now. So definitely, keep that in mind. And then, of course, we're going to kind of go over what we covered today and see if anyone has any questions. Um, if you have anything you want to share on what you do, we'll open that up really quick at the end. But just letting briefly, let's just go over this for the financial emergency. Costs associated, with the financial emergencies, having the value of having that emergency plan, how to create it, how to protect yourself, so hopefully this workshop, has provided guidance, support, information that you didn't know, um, and how to handle this financial emergency or an existing one. But we want to, thank, City of Dayton and let you know that we do have next month, September 13th, we'll be at your benefit and wellness fair. We have additional financial wellness workshops. November 5th is the next one. Um, Anytime anybody has any questions, though, um, we do identity theft, we do budgeting, we do mortgage, we have grant money that we can help you. We have just credit, how to build credit, repair credit, get credit. So anytime that you have questions on financial wellness, financial education, if you want to compare what we have in our tools, um, this next slide just lets you know that we do convenient in-person online mobile banking. We have select offers and rewards for the City of Dayton employees. We have financial wellness, which is the educational seminars. And if you have questions on anything, if you need to compare what you have, if you already bank with us and want to see if the City of Dayton's code is on your account so that you get no minimum balances, no monthly service charges, free ATMs, discounts on loans and lines, let us know. Send me an email, and just say, hey, I'd love the upgrade for the City of Dayton. It's basically just a code that we put on your account. Nothing changes besides a free upgrade. Student loans, retirement savings, anything that you have questions on, that's a part of the workplace that we have. So I just want to thank you again for having us today. I hope that you were able to use the participant guide or maybe able to, use it later. I know this is being recorded, so if you missed a part of it or have any questions later, we have our contact information on there also. And then Patty, if you can, check chat and see if anybody wants to share anything.
Yeah, there was, I think, is it Michelle Simmons? Gave just a great suggestion. So as you receive your annual increase instead of kind of utilizing that almost as a disposable income, throw that over into your savings or investment accounts. And I'll be honest, that's definitely a rule that I live by, because if you stop and think about it, you've been living day to day without that increase. So instead of going and spending it on things, just throw it into your savings account. Um, 401k retirement planning, make sure that, you're really focused and zoned in on building that nest egg to make sure that you're going to be able to have enough saved when it's time for retirement or, in this case, this workshop, an emergency. One of our colleagues shares just a great story. She did a quick look to see how much she was spending. She loves Starbucks, and she took a look to see how much she spends every month on Starbucks, and it was staggering. And so, in order to kind of begin to increase what she could save, she went out and bought a really nice coffee pot. She makes coffee at home. She travels quite a bit with her job too, but she now takes that coffee from home rather than stopping to make that purchase at Starbucks. So it's really kind of taking a look to see, one, where am I spending my money on? And then two, where can I maybe tweak it a little bit and start saving that money in other areas? So, but I thought that was just a great example.
It is such a great example, and she has told me that so many times. So it was like almost $7 a day, 5 days a week. So that was like $1,800 a year, that she was spending, and so she said she allows herself at least 1 or 2 a week now instead of 5, and then makes her coffee, and then it's just really cut it down. So she said she has to reward herself by getting the Starbucks, but she's definitely cut back, so it's good. Thank you, Patty, for sharing that.